I'm a realtor. What do we need to be doing right now in order to prepare for next month, the coming months?
It seems to me like we have a lot of fear. It's a fear of, is it going to crash from here? Is it too expensive? There's a lot of fear. The data is the antidote to the fear. It's the opportunity for you to be clear and to be that voice of expertise. And so using the data, it's okay to admit that market shifting. It's like they go, oh, thank you for communicating clearly with me.
Right.
So that data is the antidote to the fears that are out
there. Hi, welcome to the Chris and Garry Show. I'm Chris Scott, joined by the illustrious Gary Krath, and we're here to talk about all things real estate. It's not our first radio, so we think we have a thing or two that we can contribute, and today we have a really special guest, so we're excited to get into it. If you like what you're hearing in this episode, please be sure to like the video, maybe drop a comment, definitely subscribe to the channel. Now, if you really like what you're hearing and you want to take the conversation to the next level, definitely go to our website. Check us out at thepaperlessagent.com or find us on Instagram at thepaperlessagent. Let's dig in.
We are delighted to be welcomed by Mike Simonson, the president and founder of Altos Research, recently acquired by Housing Wire. Mike, thank you so much for joining us here today on the Chris and Garry Show. We are delighted to have you here. We're here to talk about all things real estate, and oh my gosh, do we have some things to talk about today.
I agree. I mean, one of the things, Mike, that I love about, because you do a weekly update video that I watch on YouTube, and I love how you guys have the most recent up-to-date information, and the interpretations I always feel like are spot on. And your predictions for the year have really planned out and panned out the way you said they were going to pan out. So we feel like there is no one better to bring to our show, the Chris and Garry Show, to talk about what's going on in the real estate market from a data perspective than you. So welcome to the show.
Guys, it's great to be here.
Awesome. Well, Gary, I think maybe one of the first places for us to start in terms of asking Mike questions is, what the heck has the market been doing? How's the market right now? How is the real estate market right now? What's been going on?
This is a great question because, Mike, I think that most of our viewers as real estate agents and brokers, we're listening to our customers, we're listening to the national media, and we're listening to all of these pundits out there who are actually just making money off of clickbait.
Sensational. There's a lot of sensationalized headlines out there. Yeah, every day it's a different one. It's either surging or dramatically dropping. But so I think we need to get to the truth.
Give us the DL. What is real? What is real right now?
So what is real? Well, we know that the story of the year has been limited inventory. And it's funny because when we started the year, we were coming off the fall and the second half of last year, inventory built dramatically off the crazy pandemic, right? So the second half of 2022, we're looking at 2023 and you're expecting rates haven't really come down and therefore buyers aren't really going to come back and therefore inventory would likely grow during the year. You could also, in 22, we were expecting, all signs of economy slowing down. So you could imagine that adds more to inventory, and none of those things happened. And so, each week since the start of the year, we've had fewer and fewer homes available on the market. We've had more buyers than sellers, even though there's not a lot of buyers, there's still more buyers than sellers. And so inventory has been shrinking. It's now the end of May and we're finally seeing inventory start to tick up each week. And it was just remarkable. So, and for like home buyers and sellers who are still reading, seeing headlines that say, home prices are down, home prices are falling. And a lot of the home prices are really like, those headlines are really lagging, right? They're looking at several months ago, sales that happened in whatever, March and April. And now it's the end of May. And they're comparing with the peak, the absolute peak of the frenzy last year. So like we have all of these things so that home buyers and sellers can be really surprised at what's actually happening in the market right now. There have been more buyers and sellers, so inventory has been falling. That's also kept a floor on prices. So, rates went up, Prices were already high. We have an affordability challenge, right? It's a significantly less affordable today for the same mortgage than a year ago.
Mhm.
That's no secret. So prices adjusted down in especially July and October last year. But the thing is, they're not falling now.
Mhm.
And so even though we still see the headlines that say home prices are down year over year, that those adjustments happened, in the fall of last year. And so, the two things we've got more buyers and sellers. We've got enough buyers at these price points and these mortgage rates to keep a floor on prices. There's not a lot of upward pressure on pricing, but it's certainly significantly better, surprisingly better than what we expected, like going into January.
What do you think is causing I mean, it would seem like inventory should have grown or should have grown. What's causing sellers not to want to list their home and sell?
Well, you get a few things. So, most of the inventory normally would be I'm moving up, I'm moving down. I'm a buyer and a seller. When I am buying now, there's a lot fewer people moving right like now. So it's like there are fewer sellers, sort of natural sellers in the market.
Mhm.
Even the people who are selling and who are buying a new home, their existing mortgage is super cheap. So it's really tempting to not sell that existing house, even when I'm buying another one.
Mhm.
Right. And my brother's doing this in DC right now. He's moving from DC to Philadelphia to take care of the in-laws. They have an ultra cheap mortgage in Virginia. They're never selling that house. They're just buying another house. And so therefore inventory doesn't get added to the market. You might also find inventory that, in a slowing economy, maybe investors get spooked, right? And maybe some of those deals no longer pencil out. And so, with costs going up. And so you could imagine that investors might sell homes, but they haven't because people are still employed, rents are still high, vacancy is still low. All of those things are still really good. So investors haven't unloaded anything. You might find
my wife and I have been talking about maybe selling our current house and buying something different in a different location. But to your point, our mortgage rate is so low. Like we can't let that
hard.
go. It's just
Yeah.
it's so hard to let that
it's
go
the
because
deal of a lifetime.
Yeah. Even if you didn't buy during the season when they were really low, you probably refied. And that's what we did with our primary residence is we were like,
Right.
okay, let's refinance. And I don't know what the rate is, but I think it's around 2% or something like that. Some
Oh my
ridiculous,
goodness.
crazy
I mean,
thing.
it would be insane to ever try and sell that house. I mean,
Mhm.
if you ever move, you just rent it out, which is what these people are doing. Now, Mike, you touched on something a second ago I wanted to refocus on, and that is so many people focus on sales data, which in a very rapidly changing, rapidly moving market, sales data is lagging by 30, 60, maybe even 90 days of what is actually happening with the pricing. Can you touch on that a little bit? Because this is something
Yes.
that we really try and teach our members about is, just focusing on sales data is not good enough. You need stuff like Alto's research to give you the real-time data because sold data is old data.
Well, Gary, I heard Mike give a talk in one of his recent videos, and he was explaining why the headlines look like reporters are schizophrenic or whatever. It's because, and you explain the timing of it. Can you do that? Can you explain
Yeah.
the timing of, like, when we hear pending home sales or existing home sales, and we get reports on that? Maybe you could explain to everybody the timing of when the data and when this occurrence took place.
Yeah. So
Compared
if
to
you
the
think
headline.
about, the way home sales work, right? House is on the market now. It gets an offer in June. That deal closes in July, maybe August. And then you start hearing about that in August and September.
Hmm.
But I can tell you right now what's going on, right?
Right.
And we know that if the house is on the market now, and we know that nobody is in the open house, and maybe we do a price reduction, or the next house that gets listed knows that, hey, that open house is full, and they had 10 offers, now I can price a little higher because I know that there's some demand out there. Those are signals in the active market right now. And that's what we try to report on. And if you think about, you want to know what the home's sold for a valuation reason. But if I walk into the market right now, I'm less interested in what sold 2 months ago. And I want to know, do I have a lot of options? Are they in my price range? Are they moving quickly? Like those are all active market signals, and that changes every week, right? So now I'm thinking about, engaging with my buyers and sellers, and it's like, hey, I'm going to put this report in your inbox every Monday. Like, I want you to watch this one number. Like, is our inventory increasing? Are your competition increasing? Like those kind of things are really what we get. And that, the houses that sold in March are, that's not meaningful to that. And so then you get the headlines, right? The headlines are what we have: the home sales data, you have the Case Shiller, like all of those things they have to be backward looking. And, the market a long time, that was, very different market.
Yeah, so much can change just over a few months, let alone a month or a few weeks. You think, especially in the current market with the interest rates changing as they have, it's like, okay, one market, all right, like it's looking good. Rates are coming down. 2 weeks later, rates are hitting 7% again. It's like ebbing, flowing right now, not 3 months ago.
Well, and everybody knows the market cooled way down last fall, and a lot of people that read the headlines think that the housing market is still in the tank. And if you just look at the headlines that say right now they're saying home prices are down. Home prices are down year over year.
It's just old news, right?
It's old news. That's right. Home prices fell, right? They fell last year, and they're not falling now. They could fall again, but they're not falling now.
So let me ask you this question, because if you read the headlines and they are old, right, they would suggest that maybe there's some kind of pending real estate crash that's going to happen in the near future. Would you suggest? Would you say that there's any possibility of a real estate crash in the next 3 to 6 months?
So,
boy, this is really putting them on the spot, right?
This is the hot seat right here, Mike. There are. I think there are a lot of people who have big fears about the economy. They have big fears about the deficit and the Fed, and like there's a lot of story out there about that. And then they assume that home prices must crash. That consumers are over leveraged and home prices must crash. What I can tell you right now is, we have no signal anywhere in the data of a crash happening. So there's no indication of a surge of new listings that would put supply ahead of demand. There's nowhere in the data. There is signal of, for example, we track the percentage of homes on the market with price reductions. When demand cools, those price reductions tick up. You got to cut your price. When demand's heats up, price reductions fall. And price reductions have been falling, which means to me that there's no signal in the next handful of months anywhere in the data now that there's a crash imminent.
Now, Mike, is this also an indicator that maybe sellers and their agents are getting more realistic about not overpricing homes, expecting the housing prices to continue to surge like they have? Because that's one thing, a lot of people reported for a long time is, oh my gosh, look at the number of price reductions. Look at the number. It's like, well, yeah, they had to do price reductions because they're coming off of a historically hot market. And in order to meet the demand pricing now, they have to reduce their pricing to a much more realistic pricing. That doesn't mean that prices are falling. It just means that sellers are no longer able to demand exorbitant prices like they used to be able to.
The price reductions tell us that future transaction prices will be either higher or lower from here, right? So we can see the houses on the market now. if price cuts are climbing and they're over a certain sort of common threshold, about a third of homes are overpriced when they get listed in normal market. Sometimes that's intentional, sometimes it's accidental, sometimes it's the crazy seller who wants to go fishing, whatever it is, right? About a third. And so when there's more than a third that take a price cut, that's because demand is weaker. And that implies that future home prices, there's down pressure on that. When there's fewer than a third that need a price cut, that implies that demand is there. Prices aren't falling from here. So that's what it tells us about future transaction prices. And, I will say that, Chris, to answer your question even more completely, there are external factors that could hit the market. For example, debt ceiling doesn't get resolved. Mortgage rates spike, all kinds of craziness goes into the economy. That's not in the data now. People buy the data. People are buying their houses now on their income now and, on their mortgage now. And that's not in the data, but it could happen. It could be an acute impact on the market. Recession, economy tanks hard, jobs, we lose a ton of jobs. People get unemployed. That could happen. And therefore that could slow down the market dramatically. Now, with a job loss recession, it's usually about 9 to 12 months after the jobs loss before you really start seeing the inventory. So if let's say second half of the year, recession is hitting hard, we get a lot of layoffs. That's actually probably 2025 inventory before that we would get that. Because, you think about it, you're like, I lose my job. I'm out of work for 90 days. I can't find another job. Now I start worrying about my mortgage payment. I maybe stop. And then I've got at least 90 days or maybe more before I really get, in the foreclosure pipeline. So that's it's like a year down the road before you see that inventory start to grow.
And that's assuming that they don't have equity, right? That's assuming that properties values didn't go up, and they don't that's assuming that they can't sell their home and still get out of it without any
all
problems,
of those assumptions have to be true before we get real distressed inventory. Right?
That's a lot of assumptions.
And have no equity and can't sell the house and you have a lousy mortgage. All of those things need to be true.
And in many of the recent recessions, not the Great Recession, but in many of the recent recessions that I recall, housing wasn't affected for very long or at all. I'm thinking of the post.com, and after 9/11, there was a very, very brief pause in real estate. But then after that, it was back, business as usual. Whereas other areas of the economy certainly suffered. Right. But it doesn't always have to mean that, there's going to be a foreclosure crisis. That doesn't always happen. That happened in the most recent cycle, but that doesn't always happen.
Yeah. So I think, that I generally agree with that. And we know that, like I said, there's nothing in the data now that says crash, right? We have historically low inventory. We have people buying that. You can imagine, you could see last year when demand cooled, you could see it most dramatically in the Western boom markets, Austin and Boise and Denver and Salt Lake City, those cooled fastest. The price reduction spiked from 19% of the market had price cuts to 60, that's a real signal, right? Mm-hmm. And, but those have recovered this year. And so you can see that demand could cool quickly again. In a big, with big economic shocks, and so that's not out of the question. But even then, it's the price adjustments down have been a little bit, right? It's there, and so, but not doesn't. I don't see any signals of significant crash.
Got it, Mike, I'd love to pivot for a second here, because I'd love to take your knowledge and your expertise and the limited amount of time that we have to capture this. And I want to pivot and turn this towards, what does this mean for our audience. And our audience, these are real estate agents and real estate brokers across North America. What does this mean for them? And what do we, I'm a realtor, what do we need to be doing right now in order to prepare for next month, the coming months, maybe the next 12 months? What do I need to be doing?
Yeah, I think like just having an understanding of, all right, well, how do you think the year is going to play out, and what can I do to prepare for that as a real estate professional?
Yeah. It seems to me like we have a lot of fear, consumer fear. It's a fear of, is it going to crash from here? Is it too expensive? There's a lot of fear, and the opportunity that's provided, the data is the antidote to the fear, right? It's like, look, here's what's actually happening in the market right now. Here's I know you have your story, whatever that story is, but let's share what's actually happening in the market right now. We know right now that there are fewer homes on the market in almost like most of the country than there were last year at this time. Like, we're now below that. We have fewer homes on the market than we did in 2019 for sure. And maybe only Austin is still like back at a greater, but even Austin's doesn't have a lot of homes on the market.
No.
Right.
No, I live in Austin. I'm in Austin. I can tell you, just driving around, there are not a lot of homes on the market.
We have
right?
very low inventory here.
Yeah. So that data is the antidote to the fears that are out there. It's the opportunity for you to be clear and to be that voice of expertise. And even when the market is shifting, price reductions are climbing, right? Let's say like they were last year at this time. Now the opportunity is, you go, look, price reductions are climbing. As a buyer, that means you have more options than you've had in years. Let's take the opportunity to act now, right? Let me show you what that means. As a seller, that means maybe we want to get ahead of this curve. Let's price it right now, so we're not doing a price cut later on. And the longer we wait, the tougher that market gets. And so using the data, it's like, it's okay to admit that the market's shifting. It's like they go, oh, thank you for communicating clearly with me.
Right. So what I'm hearing here, Mike, is something that we really focus on all the time, and that is we need to be a local market master. We need to be the voice of reason with the data and the knowledge of what is happening in our hyper-local areas right now. And the best way to do that is to actually take real data and decipher, this is what it means to you. But we've got to do that like in our own local market. And by the way, one thing Chris and I just like scream from the mountaintops is that you have to do this through video. The very best way to communicate your value, your expertise, your knowledge is through video and deciphering what do these numbers mean. And that to me, that's where we need to be as realtors right now. And by using data that like you provide, that I can then really decipher what it means for my like local market. That's power.
Yeah, Gary, it's funny. A lot of times agents are afraid. Like, I don't know how to talk about the data. What do I say? And so, what I recommend for folks, when they're doing video is I could screen share an Altos report, and I could walk through how we might do that. If you like. This is an Altos report for San Diego County. This is branded for Altos, but like the agents have it branded for you so that you are sending your report, your San Diego report, to your clients. And when you're doing video, the interesting way to do it, like even if you don't have an idea of what to say, you just take the market profile and you say, the median price in San Diego this week is $1,449,000, and you can see that it's been trending up all spring. We know that days on market is only 28 days. We're down to 28 days, and that's been falling all spring. We can see inventory. There are only 1,374 single-family homes on the market in San Diego County right now, and it's been remarkable how that's been falling all spring. The market, you might be surprised, is actually what we call a strong seller's market. That's because the number of buyers to the number of sellers is actually, there's enough demand that keeps those homes are going quickly. And so we can see those, exactly why we call this a strong seller's market. That may be very different from your expectations if you're just reading about home prices from last year are down. What we see in the market right now is that the inventory is so tight that we have a strong seller's market. So just that, I didn't do anything except read the numbers on the report. And now I have a video. And people go,
and now you have authority too.
I have authority. Right.
You have authority in the marketplace, because this is something that Chris talks about all the time, is that who speaks with statistics and knowledge of those numbers? An expert, which means you have authority to be able to say that to your customer. And if you want to go further, you have the knowledge, well, then you can interpret, well, hey, if you're looking to sell a house, what this means to you is this is what you can expect. If you're looking to buy a house, these are the things you need to do to prepare to buy a house right now. That's power.
I think, what's interesting is that the headlines that our consumers, and let's face it, we as real estate professionals are also affected by the headlines, right? Yeah. But the headlines are based on national averages, which means it actually is not representative of anything, because real estate truly is local. And you have to go into a specific market to explain, here's what's going on in San Diego. Here's what's going on in Austin. You really can't apply these broad averages to my situation and what's going on in our local real estate market. I think the fear that the national headlines produce is one of uncertainty. It is the lack of knowledge, because it's not really reporting on anything real, right? Like if I read the headlines and I walk around in Austin, even in Austin, like there's not a lot of inventory out there. Yeah. If you're looking for a home, you're thinking, if you've been looking for a home in Austin for the last 3 years, you're like, oh, now's finally maybe a chance that I can get in, right? But you're not like jumping up and down saying that, yeah, finally the market crashed, because it hasn't. And so for each, it seems like you mentioned something, what did you say? The voice of, you mentioned that as real estate professionals, we need to be the voice of, what was the word, Mike?
Did I say clarity? Maybe
voice of clarity. We have a version of that. We say, as real estate professionals, we need to be the voice of reason in our local markets, and we've been big advocates of that ever since the beginning of the pandemic. We've been saying, be the voice of reason. Yeah. And I think what you're talking about is, if we can use data, and we can use data to inform consumers, and the byproduct is we look like experts. It reduces the amount of uncertainty that they have. Right? Because now they're like, oh, that's what's going on. Well, now let me refactor that calculus into my decision-making based on the information that you provided me. Hence, you're the expert. Now we can dialogue about it to see whether or not this is a good decision or choice for me. And you can open up all the doors of possibility and windows of possibility. So that seems really effective to me. And
the opportunity is you put it in their inbox, and then the opportunity is when they have questions. Hey, Chris, why is this different from the headlines? Right? Like now you have an opportunity to engage. Like you want to take that call all day long, right? Yeah. Why does it say this? Well, let's talk about it.
Those are buy signs, right? And those are buy signs. When someone has those types of questions, that's telling you they're interested.
Yeah, for sure. And it's your opportunity to be that voice of clarity. Yeah, that's for sure. But it's a hurdle for some agents. They're like, I know I'm supposed to do the data, but I don't know what median means, like that kind of stuff. It's okay, right? You just read you read right down the page, and then it like really becomes useful. You can also, the other technique I like is that, when somebody says, oh, you're a realtor, how's the market, right? Like, how's the market out there? To have a data point in mind is really interesting, right? Oh, you
This
might be
is what I'm
surprised.
talking about. Mike,
There's
you're
only
my
1,400
man.
homes for single family homes in all of San Diego County right now. Normally it's 4,000. Like,
Yeah, just having that one data point. If you could just
just one.
memorize one data point from the report,
Yep.
You
you're
stand
going
out
to
from all
sound
of
like
your
an expert.
competition.
Yeah, you're going to
Yeah.
be like, yeah, there was a speaker trainer from back in the like 80s and 90s, a guy named Rick DeLuca, and he used to say that stats will make you money, right? Like if you can remember a stat that's kind of current related to housing and you can reference that, it's just going to make you sound like a professional because no one else.
What happens is all of a sudden they trust you at a different level than they trust some other agent who, like, typically, Chris, let's say you're a real estate agent and I see you at an open house or a cocktail party or the golf course.
Mm-hmm.
I'm like, Chris, how's the market? And you're like a typical agent. What do you say?
Oh, it's great. And I'm never too busy for your referrals, my friend.
Yeah.
Great.
I mean, come on. I mean, that right there, it makes me want to kill myself because it gives me no value. Whereas
It actually shuts down the conversation.
Mike and I say, Mike, hey man, how's the market right now?
I'm like, you might be surprised. There's only 1,400 single family homes available in San Diego. There's usually 4,000. Like, inventory is so tight. People are buying stuff. Like, you'd be amazed. And then you go,
then all of a sudden this opens the door for further conversation. Yeah. Then all of a sudden I'm like, wow, Mike,
that doesn't line up with what I've seen in the news.
That because that's not what I saw on the national news. And my wife and I have been thinking about selling our house. Do you think now is a good time to do that? Bam.
Yeah.
Done.
Or you say, at the very least, you go, hey, let me just put my report in your inbox every Monday. And you just now you just add them to your list, and now you nurture them because maybe they're not looking to sell for 3 years, but you're the guy who's been sending them the report for 3 years. Mm-hmm. You're their agent, right? Yeah. And so, like, some of that nurture, that lead nurture, and that conversion right there, you go like, oh, yeah, you want to get the report? I'll send it to you. You can have it every Monday. You can have my paperless agent report.
You know what? I didn't realize this until we just had this conversation. But so many of the scripts that were taught in real estate, they really shut down conversations as opposed to opening it up. And in order for us to serve more people, we actually have to open conversations up. We have to get them to be interested and to talk as opposed to the standard, oh, it's great. And if you're thinking of buying or selling, I'm never too busy. Like, the traditional scripts that we're given really do shut conversations down. Yeah. And what you're talking about is the exact opposite.
Those scripts were written before we had all this power at our fingertips.
Yeah. Right. From the 80s and 90s, right? Like, these are old, we're taught insane, like, people are still teaching old strategies from the 80s and 90s when the listings are on the internet, right? Like, the data's on the internet now. The strategies that most people are using is before Al Gore invented the internet. And so what we have to do is adapt our strategies and adapt the information that we're sharing because there's so much out there. So, Mike, people reading current headlines, they're probably hearing about debt ceiling problems. What do you think is going to play out there, and what do you think the impact could be on real estate?
So I don't have any idea about how it plays out, but I do know that that we can already see mortgage rates rising in the uncertainty. And if there's some kind of default, or we get even closer to the edge of default, mortgage rates are rising. Could spike even higher there in that uncertainty time. We can see, when we go from 6.5 or 6.2 to 7, that's a drag on demand right away. Right, there are people who stop shopping. They don't make the offer when they were looking at 6 and now they're looking at 7. Mm-hmm. And so that's a real risk to the continued strength of the market this year. Like this, it's been surprisingly strong. And so that debt ceiling crisis is a real risk to it.
Let me ask you this now, within the debt ceiling issues, there is, because you mentioned the word default. And when we hit the debt ceiling, it doesn't necessarily mean we will default, because I remember the last time we had a debt ceiling crisis, we didn't default. We just stopped paying certain people. So, is that a possibility now to where we'll continue to pay the US's bills, but maybe certain people that were used to getting paid that won't affect our credit rating won't. Because I think that's what happened last time around. I don't remember when it happened last, but I do remember it happened not too long ago in my memory. And that's what they did.
Yeah. So, I have, like the political and legal, hoops that they might jump through. I don't know what happens there, what the techniques are, but I do know that we can already see the uncertainty driving mortgage rates higher. You could imagine if there are chunks of the economy that don't get paid by the government, the economy shrinks. People lose their jobs, right? Like that happens right away. And so you can imagine that any kind of prolonged uncertainty or challenge there impacts housing pretty quickly. And we can see it. We track, the number of new pending sales each week. And, we can already see an uptick this week when rates went from 6.25% to 7% over the last, 8 or 10 days.
Mm-hmm.
So, Mike, if we break it down for everybody real quick, Mike, is this debt ceiling crisis going to crash the real estate economy in the United States?
The signals are that housing will make it through. If it gets really bad, like if the crisis hits real crisis, it could indeed throw brakes on lots of things, and one of those things could be housing. If mortgage rate, if the bond market goes nuts and the 10-year goes to 7 and mortgage rates go to 9.5, people are going to stop buying houses. And I don't like that. There's, as I say, I don't have any ability to predict mortgage rates.
No,
Like,
of
none.
course not.
If I did, I would be trading mortgages instead of doing housing.
But I think what I'm hearing here is there are so many ifs and buts that we can't make heads or tails out of it until it actually happens. We don't know.
And home buyers and sellers don't either, right? Mm-hmm. I'm buying today. I've got my mortgage rate lock in. I've got my offer. I've got my salary now. I am buying on what I know right now. Mm-hmm. And we've seen this crisis coming for 6 months, and people have been buying homes because that's how they are operating on their now. They might lose their job in the future, and then that there might be implications in the future. But it's why right up until that moment, the market acts as if it's not in place.
It's interesting. If you've ever Howard Marks, who's the co-founder, I think of was it Oak Tree Capital. He has a book called The Most Important Thing, and Howard Marks has a lot of memos that he has written that are publicly available from his website that talks about like market cycles and the psychology of the market. And what's interesting is that he talks about how the market is never gets as bad as people think it's going to get, but it never gets as good as people think it's going to get. It just kind of drifts between kind of sucking and kind of not sucking. You know what I mean? Like generally speaking, because you could even say, well, what about the Great Recession? Yeah, I remember at the time of the Great Recession, you know what they said? They said our country was going to not be a country anymore. Now, I don't know if you remember, they were saying it was going to be a Great Depression.
Everybody is seceding. 30%, it's going to disappear.
Yeah, no, they talked about, 30% unemployment rates. I mean, I remember Great Recession news, and it was like, yeah, this is the end of the United States. Forget about it. Just go ahead and move somewhere else, right? And it never got that bad. By the way, it never gets as good as you think it's going to get. And that's what Howard Marks talks about is obviously the national media, they have to sensationalize to get our attention, and the worst case scenario is what they're going to get our attention with. But rarely does it ever get to the worst case scenario. It just kind of drifts between good and bad, not so good and not so bad, right? And I think that's probably the most realistic play out of all of this is it'll be kind of bad or it'll be kind of good. And it'll just sort of vacillate in between those two things. It's not the end of the world.
Yeah, it's funny that it is some of the most interesting wisdom I've heard on the topic is, when the world is about to end, do you go short or do you go long? Right? Do you sell before the world ends? Mm. Well, the wisdom is you go long because the world doesn't end. Mm-hmm. And so it's an opportunity. On the other hand, it's really hard to execute on that and to pull the trigger when the world feels like it's about to end. So it's like, but like the great traders can do that. But like for me, it's, I look at it and I see all the reasons, that the world's going to end too. And so it's hard for me to go long too. But that's the wisdom, but my observation is like, it's like, how hard it is. I had Gary Beasley, who is the CEO of Roofstock, the founder of Roofstock. He was also the founder of Wayfair Homes, which was the first institutional single-family rental buyer, first one to own over 1,000 homes. And they started buying in 2009. And they looked around and they said, wow, we've got some yield on these houses. We're going to start buying these houses. And people had all kinds of reasons why not to do that, right? Managing single family at scale is bad, and the market's still going to tank is bad, and so it took real guts to start buying in 2009, like real guts, and then raise institutional capital to go buy a ton. Even when you intellectually know it, it's still really hard to
pull. Because Warren Buffett has the advice of like sell when everyone's buying or something like that, and be greedy, or something about be greedy when everyone else is scared or something like that.
That's right.
But that's really hard to do in practice. I think what's really interesting though is if you look at any situation where there's some kind of form of extremes, right? Extreme low inventory or extreme whatever, there's always seeds of another opportunity that are embedded somewhere within that, right? And so I think that is and being close to the data is probably the best way to be able to read those tea leaves, because you start to see the signals. To your point, you start to see the signals like, oh, there might be an opportunity here. Oh, there might be an opportunity over there. For example, right? Like if you're focusing on getting listings, the National Association of Realtors just did a report not too long ago on their generational buyer and sellers. And what they found is that over half of sellers are boomers, baby boomers. So that's an opportunity right there that, oh, okay, well, even though the economy might get rough, baby boomers have a ton of equity. And they were prioritizing lifestyle, right, over money. Why? Because they're older, and that's what you typically do when you get older. Yeah. And so there's always opportunity, but if you stay scared, you don't pursue opportunity. If you stay scared, you get analysis paralysis. But I think, like being able to dive into the data, educate yourself first, right? Like it's like the old adage of put your own face mask on in the airplane type thing. Yeah. Get yourself some data and arm yourself with some information so that you can be confident about what's going on in your market. Once you've done that, now you can passionately go out there and inform and educate the people in your market so that you can get more customers, because you're that voice of reason. You're that voice of clarity for folks. Yeah. And so that seems to me to make so much sense.
Yeah. And Chris, when you talk about when we're in the extreme, the opportunity starts to present itself. And the extreme we're in right now is extreme low inventory, few sellers. You can imagine we've had year over year less and less available inventory of homes on the market, really for 11 years, since the beginning of the last decade. There used to be 1 million homes, 1,200,000 homes, single family homes on the market would be in at the end of May. Then it was 1 million. Then it was 800,000. Now it's 420,000 this week. And, but in that same decade, we've had generally falling mortgage rates that whole time. It's been cheaper and cheaper to hold investment property, to buy new properties and not resell them, to move up and keep my first one. Like all of those things have been cheaper and cheaper. And so each year we've taken about 8 million homes out of the resale market and we're holding onto them as investment properties. Now over the next bunch of years, if rates stay in the 6s or 7s, or they're gradually higher, then you will see inventory build over that period. Maybe we can get back to an old normal if rates are higher over that. So then you have, while it feels right now it can be tough in this business because there's fewer transactions because we don't have houses to buy, we can imagine that next year, we have a few more. Even if rates are higher, the following year we have a few more, and we allow that, and so our transaction volume can build over that time, even if rates are higher.
Yeah. Well, Mike, Chris was just talking about inventory, like you're talking about. We're talking about stats and data and information. and about how we as real estate agents can actually stand out from our competition by having access to this data, but also understanding what the data means and how to communicate that to our client base. So, Mike, if I'm coming to you, and I mean, I've been using your data for a long time, but if I come to you and I'm like, Mike, I'm an agent, I need to have this data, I need to understand what it means and how to interpret it. Like, where's the first step I should take? What would you tell people? This is what you need to do.
Yeah, you know what we've done is we have created an ebook, How to Use Market Data in Your Real Estate Business. It's a free ebook. It's on the Altos Research website. It's right on the top menu. Download the ebook. It gives you like scripts. It gives you the ideas. It gives you, today we talked about inventory and we talked about price reductions. We talked about days on market. All of those things are in this ebook so that you can know how to talk about the data. It's free. Go get it, knock yourself out. It's great. You can also run like local reports and stuff on the Altos site, but go for the ebook first, because that's like a really great place to connect and like learn and to think about, to trigger good ideas about the conversation.
Oh, what a great gift. What a great gift to the real estate industry, Mike. Thank you so much for creating that. And also, thank you so much for joining us here today. This has been an incredible deep dive into, like, what does this actually mean? What are the numbers behind what I actually, as a real estate agent, what I need to be using and communicating to my home buyers and my home sellers, so it actually has meaning. So with that, Mike, I wanted to say thank you. Chris, thank you so much. This has been amazing. Mike, if everybody's looking for you, Mike Simonson over there at Altos Research, go download that ebook. It's an incredible resource. Start your journey there.
Yeah, and if you want a link to that resource, check out the video description. The description in the video, we'll put a link there so that you have easy access to be able to download that report.
Thanks, guys.